A $14 billion profit was nice work for the world's biggest miner, BHP Billiton. But even though it's gone hostile with a $44 billion bid for Canada's Potash Corporation and has also approved a record $17 billion spend on new projects this year, the official line at the annual results briefing this week was that BHP is cautious about the future. But how cautious is spending $60 billion? I spoke to BHP's money man, CFO Alex Vanselow. Well, Alex Vanselow, when the bid for Rio Tinto was withdrawn and BHP started talking then about it was going to build rather than buy, that it was all about the development projects, all the presentations showed the pipeline of development projects. So is the bid for Potash Corp of Canada a bit of a backflip from that attitude? It seems that way.
No, it is actually not. We are very well endowed in resources. We can follow the build process for long term. Buying is opportunistic, Alan. So when the valuations match, when the tier one assets, the assets that are long life, expendable, that fit with our portfolio, present themselves as an opportunity to buy, we need to act on that.
So what's the opportunity in potash that arose? Its price came down or something?
The opportunity in potash is that we are now in a situation where our balance sheet allows us to raise the credit necessarily to buy, the valuations match. And basically, if you look at the landscape of competitors, they are not in the same position as we are. So you've taken all this into consideration, you see that this is an opportune time to...
So the opportunity to some extent arises from BHP's financial strength, the cash that you've got. I mean, the Financial Times Lex columnists called it, you're flashing your black Amex card.
I don't know if it's a black Amex card, but the discipline of the past have led to the position we are in the present and is unique in our peer group.
The other disconnect, I guess, is that in presentations this week and also in the past, the company's talking cautiously about the future, listing the things that would cause you not to make big takeover offers, the problems in the manufacturing industry around the world, the high sovereign debt levels. China is slowing as well. So does the fact that you're now bidding 44 billion Australian dollars for potash mean that you're not that cautious? You are actually optimistic as a company?
No, we've been optimistic on the long term from the beginning, but cautious on the short term. And what we're saying is that what we're seeing out there is in the short term we'll see more volatility, but the building blocks for the long term is still the same. When we look at an acquisition like potash, we look for the long term. We are able to deal with the short-term volatility because of the diversification in our portfolio and the strength of our cash flows. But on the long term, we are very positive about where the world economy is going.
Now, potash's share price is well above your bid. That you're bidding, I think it's about 30 or 40% above. Can you pay more?
There is only one offer on the table, so why would we compete against ourselves? The issue is that the offer is for $130. Potash Corp in 22nd of June, if I'm not mistaken, came to the market, presented their growth profile, presented their perspectives for their commodities in their company. It was all priced in their shares, and we approached them after that. So we believe it's a fair offer, it's the only offer, and that's where we are today.
You went hostile very quickly. I mean, it took months to go hostile with Rio Tinto. This time it took 3 days.
They took the proposal public, and we had to respond with an offer.
Is it fair to say, and a lot of people are saying this, that you really need to win this one, having lost out on Rio, and there's a sense that Marius Klopper's CEO, his job's on the line with potash, not perhaps about winning it, but certainly about making it work?
We don't see it that way. The way we see it is that if there is value for our shareholders, we'll pursue it. If the value is not there, like it wasn't at one stage with the Rio bid, we have no trouble walking away from it. We will be in the potash business with Potash Corp or without Potash Corp.
Now, a couple of traders with Santander Bank in Spain have been charged with insider trading. How do you guys feel about that? I mean, Santander Bank is advising you. So what do you think happened there? That some Chinese walls broke down?
Santander Bank is in the facility as one of the underwriters of the credit facility. It is disappointing that happened, but it's an issue for Santander to deal with.
Does it mean that you're less likely to use Santander in future?
I think we will investigate what happened. We'll get the feedback from Santander, and then we'll decide on that.
The facility you talk about is 6 banks, $45 billion. Is that correct?
That's about right, yes.
Are you confident that you'll be able to keep your credit rating? I mean, I think you've said you want to maintain a mid-level A credit rating. What does that mean? And is that conditional on that sort of debt level?
That's part of the strategy, the solid A credit rating, which means that we are not foreseen to go below investment grade. And that's a commitment that we have made in our strategy. If you look at what the rating agencies have come out with, you'll see that we are in that level. The
results this week, obviously, big increase, big improvement on last year. How much of the improvement is due to volume increases and how much to price?
I think price played a role in some of the LME type commodities, and you saw that they had a bit of outperformance on that in terms of EBIT from the previous year. But in some of the bulks, actually price came down, and you saw that making an impact as well. Volume was the key differential this time. We had new production coming online on petroleum, and we have a significant recovery in production, both metallurgical coal and manganese. So if you look at the impact of that volume, was quite significant, close to $2 billion of new volume.
So so that means about $1 billion is due to price.
Price actually was net of foreign exchange, which has some correlations. The Aussie dollar, the Chilean peso against price was a net decline of 1.1 billion.
Right. So what does it tell you in terms of what's happened last year and looking at the economy now? What does it tell you about your outlook, your cash flow and profit outlook?
Yeah, the cash flow for the short term, it is, as Mario said last night, it is quite predictable. It's not just the demand side that plays a role on that. One of the events that was triggered by the global financial crisis is a lot of our competitors did not invest for the last 12 or 18 months. So what you're seeing is an inability of supply to react even to a lower level of demand, and that's keeping prices at the levels that they are now. So you're looking at demand and you see some debility on the economic environment. China has slowed down their rate. Europe is looking a bit shaky, but the supply side is unable to respond as well. So I provided on the presentation one chart that shows that we, on a volume basis, are producing more now today and selling than we were before the global financial crisis.
So what's going on with that? I mean, usually when there's a boom and prices go up, everyone invests in more supply. That drives the prices down again. Why didn't that happen?
Because a lot of the peers overcommitted their balance sheet, and they had to take very severe measures to save cash. And one of the measures was to stop dividends, which most of them did, and the other measure was to stop capital deployment, which again most of them did.
Was that connected to the global financial crisis, or did they overcommit their balance sheets? Apart from that,
I think the overcommitment came right prior to the global financial crisis, and so the impact was fully felt during the global financial crisis. We, on the other hand, we invested over 10 billion, close to 10.7 billion during the last 12 months, and we also increased our dividends. So a very significant contrast to the peer group.
So how long do you think that situation is going to last, where your competitors and the supply generally is short?
The gap is permanent. What you have now is catch-up time. So all the peers are now starting to reinvest in their businesses, but in our business it takes 2 or 3 years to generate new capacity. So that 1 year gap is permanent, but in 2 or 3 years' time you'll see normalized again.
Obviously the Australian political situation is quite fluid at the moment. A big issue is the resources rent tax. The independents and the Greens are saying that the mining industry is in principle in favour of a resources rent tax. They just didn't like that one that was originally announced. Is that correct?
We're the largest taxpayer, single taxpayer in Australia. The last fiscal year we paid 5.5 billion Australian dollars in tax, which gives an effective tax rate in relation to Australian profits of about 46%. That's quite a significant tax burden. We are not against tax. What we want is to make sure that whatever tax is applied in Australia is not retroactive and it is globally competitive. So as long as it is prospective and globally competitive, we are ready to accept that.
Yeah, but are you in favour of switching from volume-based ad valorem royalties to a profits-based resources tax?
Again, as long as it's competitive.
So you don't care?
As long as it's competitive.
So what level is competitive? I mean, you actually signed off on the MRRT that was finally announced.
Which is competitive. It's
so you are okay with that?
We are okay with that. We signed off and we would honour.
But the smaller mining companies, led by Andrew Forrest of Fortescue, were not okay with it at all.
Well, then you have to discuss with Fortescue.
Thanks for joining us, Alex Vanselow.
You're very welcome.